welcome to the Simply Financial podcast. I'm your host, Christopher Calandra. We're going to increase your financial IQ with today's episode, which is a bit of an extension of the economic update I had done on the show not too long ago. The government reported a GDP number, gross domestic product, for the third quarter, and it came in pretty good. The Q3 number was annualized 2.6%, plus 2.6%. This beat the Dow Jones estimate of 2.3%. We're definitely could benefit from some good news because there's been a lot of negative news out there, as I've talked about. So the Q3 number plus 2.6, this is good. It's especially good because the first quarter and the second quarter of 2022 were both negative. The first quarter was negative 1.6. The second quarter was negative 0.6. So this is the first positive quarter so far this year. So this does a few things. First off, it's good news. Secondly, it short circuits the recession talk that I and others have talked about. Because we had two negative quarters in a row, technically you can make the case the country was in a recession. A shallow one, to be sure, but a recession nonetheless. And the other side of the argument was that we weren't really in a recession because of the strong job market. So that kind of gets short-circuited for the time being with a positive third quarter. And there's still going to be a debate over the next couple of quarters because a lot of economists are expecting that the economy will slip into a recession driven in large part by inflation and the Federal Reserve's activity raising interest rates quite aggressively. But for now, this puts to bed the recession talk. At least, are we in one now? It'll shift to, are we going to get into one? As I said, there's been a lot of negative news. This inflation story is ever present, kind of weighs on everyone because it's so deeply felt in our daily lives in a variety of different ways. But this is an encouraging third quarter number. Now, some people will say, yes, but, and that's true. We don't know if this will continue. You could look deeper into the numbers and find things that might not be sustainable. That's a pretty good debate. But I think setting all of that aside in terms of what's going to happen, the reality of this is good news. We ended the slide of two consecutive negative quarters. We have some other encouraging aspect to this. You know, we have good consumer spending. We still have good job growth. We still have wage growth. Now, this is offset with this strong inflation because if your wage goes up, and I'm just making up numbers now, but if your wages go up 3%, but inflation's going up 8%, yes, you're making more money, but you're still losing ground. You still are losing purchasing power. You're not becoming any wealthier. But still, wage growth is a pretty good sign for the economy, the job growth, consumer spending. Corporate earnings have been pretty good. So we're going to have to see how things play out. But I did want to share with you this good bit of news. And the next bit of news is going to come next week's episode. I'm going to talk to you about Social Security increases. And then after that, we're going to talk about the election and what that might mean for the markets and the economy. So we have some really, really good content coming to you over the next few weeks. So please continue to tune into the show, recommend it to others, subscribe. If you haven't already, that would be great. You could always check out the work that my team and I do here at Elliott Wealth Management by going to our website, elliottwealth.com. I will be back with you soon on the next episode of the Simply Financial podcast. Thanks for listening to this quick episode today. Thanks.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.